All right, let's talk about something that might sound a little bit crazy to some people. I've invested over $1 million in one single ETF, XEQT. Yeah, just one fund. No, I'm not saying that's what you should do, but I'll walk you through why I did it and what makes XEQT so powerful and how you can think about building a similar diversified strategy without overcomplicating things. So XEQT stands for iShares Core Equity ETF Portfolio. Think of it as a simple, efficient, and globally diversified portfolio all bundled into one ETF. XEQT holds a mix of other ETFs that cover Canadian, US, international, and emerging market equities. The key is it's 100% equity, so it's designed for long-term growth in a hybrid, low-cost, low-volatility manner and not a short-term stability play. It's automatically rebalanced and continuously monitored by BlackRock to maintain its target weights, which means I don't have to constantly worry about tinkering with my allocation or second-guessing market moves. Now, let's get to the big question. Why did I choose XEQT for such a large portion of my portfolio? Three main reasons. Number one, simplicity. I've seen too many investors chase complexity, multiple ETFs, endless rebalancing, performance comparisons, fee structure comparisons, and so much more. And at the end of the day, it often leads to paralysis by analysis. XEQT lets me focus on the big picture, staying invested and letting compounding do the heavy lifting. Number two, diversification. Even though I hold one ticker inside XEQT, I get exposure to thousands of companies globally, from Apple and Microsoft in the US to RBC in Canada and Nestle internationally. That's instant diversification in one single click. And lastly, the third reason is low fees. The MER is about 0.20%. That includes all the underlying ETF fees. For context, that's around $200 a year for every $100,000 invested. Compare that to what active management or mutual funds actually charge, often well over 1 to 2%. And it's easy to see how much more you get to keep as a result of this low fee. Now, XEQT isn't the only great option out there. In fact, there are similar all equity ETFs that do essentially the same thing or very similar thing with slightly different strategies and allocation. Some examples are ZEQT offered by BMO. Then we do have VEQT offered by Vanguard. We have TEQT offered by Toronto Dominion Bank. And of course, Fidelity, which offers FEQT, Fidelity All-in-One Equity ETF Portfolio. They all follow the same philosophy of one fund, globally diversification, and 100% equities automatically rebalanced. Though some of them, as an example, FEQT does also give you slight exposure to Bitcoin and cryptocurrencies. The real difference here comes down to the fund strategy and regional weighting preferences. For example, some are a bit more tilted toward Canada, others lean heavier into the US and emerging markets. In my perspective, the real question here is not trying to find what is the best ETF here, because how can we even define which one is best? Ultimately, more importantly, it is picking the one that best aligns with your investing philosophy and then calling it a day. For me, XEQT fits perfectly because I believe in a long-term global equity exposure and I don't need to really fiddle around with multiple ETFs. And the truth is, whether you go with XEQT, FEQT, ZEQT, TEQT, VEQT, or you name it, any sort of similar products out there, you're already miles ahead of most investors who overtrade or try to time the market. This strategy gives me peace of mind, and I can focus on my career, my family, and other important things in life. Knowing that my investments are globally diversified, automatically enhanced and rebalanced, and growing quietly in the background. And hey, let me quickly show you where things are at on Blossom. For those of you who may not be familiar, Blossom is a fantastic app and web platform allowing you to connect your brokerage's accounts and then use this platform to easily interact with so many wonderful investors from across the world, including Canada, US, many countries in the European Union, as well as soon expanding to other countries as well throughout the world. But just to show you real quick, the portfolio size is being shown here. As I pointed out, pretty much over $1 million invested, well over $1 million invested in actually XEQT fund. We do have two other holdings, including VTI and VT, and I mainly hold those two, which are in US dollars in my RRSP account, Registered Retirement Savings Plan. But focusing on XEQT, all-time return is showing out to be up by close to 35% based on price appreciation. And if I were to focus based on the overall return, including the dividend income, that is currently sitting at 39% overall return. The average purchase price for shares of XEQT for my household is at $29.07. And this lower price means that our dividends has a higher yield on cost of close to 2.5%, even though currently the annual yield for XEQT sits closer to 1.88%. Just wanted to point that out for you as well. Since I'm also sharing my screen, I'm going to quickly walk you through the other two holdings, shares of VTI, which is the Vanguard Total Stock Market Index Fund ETF shares. As I mentioned, it's traded in US dollars. Our average price for buying these shares are $237.66 based on the last trading price of $330 USD. We have a yield on cost of 1.5%, close to 1.6%, even though the annual yield for this fund is only at 1.14%. Our shares of VTI are overall up by 41% when we account for total return of both price appreciation as well as the increase in our the value based on the dividends received. And lastly, we have shares of VT or Vanguard Total World Stock Index Fund ETF. Unlike VTI, that gives us exposure to the entire US stock market, with VT, it's a fund similar to XEQT but available in US dollars and provides you global diversification, including Canada, US, and international and emerging markets. This is our best performing fund so far. Overall, total return is up by 45.5%. It plus, on top of that, it has a yield on cost of close to 2.8%, given that the annual dividend yield for VT sits at 2%. And our average price per share is at $98.63. And the last trading price, as you can see, for this fund was at $138.83 at the time of making this video. And that is the total portfolio return. If I quickly hover over to the insights and show you in terms of the dividend amount and expectation for dividend amount, our all-time return, as in terms of the dividend amount received, is at $43,000 all across all the years. But currently, our annual expected is at $21,362.94. So that's the amount of dividend we can expect based on the current yield and our yield on cost to receive from this portfolio. Which, just to give you some fun numbers, if we looked at it based on the monthly, daily, and hourly, the monthly amount would be average of $1,780. Daily is approximately $58, and hourly to almost $2.50 per hour, if you were to divide it equally based on those different units of measures. There you have it, folks. That's why I invested over $1 million into XEQT, not because it's flashy or exciting, but because it's efficient, diversified, and built to last. And the only reason I added VT and VTI in hindsight was to try to really take advantage of some of those withholding tax and avoiding that actually in an RSP account. But nonetheless, if I were to do this all over again, probably I would have stuck with the XEQT and not really complicating it, but adding those two funds. And honestly, right now, majority of our new money is only going to XEQT and not really touching VT or VTI as much. If you are someone who believes in keeping investing simple, disciplined, and long-term, and all equity ETFs such as XEQT or VEQT or FEQT or only of those versions of them might be something worth looking into for yourself. Of course, this is not financial advice, and do definitely encourage you to do your own research. Make sure you are familiar with your own approach, investing tolerance, and strategy that best aligns with your investing philosophy. Let me know in the comments which all-in-one ETFs do you prefer and why. And if you found this helpful, don't forget to hit that like button and subscribe to our channel here on Momentum Finance. And check my portfolio updates on Blossom. You can use the referral link in the video description. Hope to see you all next time.